This video is a review of Mitsubishi Heavy Industries' financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. Mitsubishi Heavy Industries is one of Japan's largest engineering and manufacturing companies. It produces a wide range of products, including ships, aircraft, defense systems, power plants, industrial machinery, and space systems. Recently, Mitsubishi Heavy Industries is attracting attention as one of the so-called Takaichi stocks. This refers to companies that could benefit if Sanae Takaichi, known for her aggressive fiscal policies and support for defense buildup, becomes the next prime minister. Since Mitsubishi Heavy Industries is a core player in Japan's defense industry, investors see it as a major beneficiary of her policy stance. First quarter financial results. Order intake was 1,768.6 billion yen. Overall order volume decreased slightly due to a decline in the defense and space segment, which had booked several large orders in the first quarter of FY2024, but orders remained at a high level. The order backlog was 10,772.9 billion yen, an increase of approximately 500 billion yen from the end of FY2024. Revenue increased by 7% year-on-year to 1,193.6 billion yen, setting a record high for a first quarter. Business profit increased 25%, reaching a record high, and net income rose 10% to 68.2 billion yen. Net income growth is smaller than business profit because in the first quarter of FY2024, there was a big foreign exchange gain due to the weaker yen. Nevertheless, net income also reached a record high. The progress rate against the annual net profit forecast is 26.2%, a good start toward achieving a new record high annual profit. Year-on-year changes in profit. Overall, in the first quarter, business profit increased by 25% year-on-year to 104.1 billion yen. The growth of 33 billion yen was driven by higher revenue and improved margins. Breaking this down, energy systems, plants and infrastructure systems, and aircraft, defense and space each contributed approximately 10 billion yen to the increase. The impact of foreign exchange was negative 6 billion yen, reflecting the change in the average exchange rate from 153 per dollar to 146 per dollar. The stronger yen had a negative impact. Mitsubishi Heavy Industries is organized into 4 business segments. Among them, the largest segment is the Energy Systems segment, followed by the Aircraft, Defense and Space segment. The other two are the Plants and Infrastructure segment and the Logistics, Thermal and Drive Systems segment. In Energy Systems segment, order intake, revenue, and business profit all increased year-on-year. Order intake in gas turbine combined cycle, a high-efficiency power plant, was strong in North America, while revenue and business profit also rose in steam power. In nuclear power, orders remained strong, and both revenue and business profit were stable. In Plants and Infrastructure segment, order intake, revenue, and business profit all increased year-on-year. In engineering, orders were strong, driven mainly by projects to replace aging transportation systems. Revenue and profit rose in metals machinery and machinery systems. In logistics, thermal and drive systems segment, order intake, revenue, and business profit all decreased year-on-year. In the engines business within this segment, both orders and revenue were strong, mainly in Asia. In aircraft, defense and space segment, order intake in defense decreased year-on-year when several large projects were booked last year. Both revenue and business profit increased thanks to steady progress in project execution. In commercial aviation, revenue and business profit rose due to a higher number of Boeing 787 aircraft deliveries despite the impact of a stronger yen. The annual earnings forecast remains unchanged. The exchange rate assumption is 145 yen to the US dollar. The annual net profit forecast is a record high 260 billion yen. The annual dividend is forecasted to be 24 yen, continuing the trend of increases over the past few years. In FY2024, MHI Group's U.S. revenue totaled 1.1 trillion yen, including direct exports from Japan and local U.S. transactions. Major exports in commercial aviation aerostructures and aero engines are tariffed by customers. Other U.S. operations, such as gas turbine combined cycle, forklifts, compressors, are handled locally. MHI's tariff-related transactions are limited, and temporary extra costs for some imported parts can mostly be added to product prices, so the impact on profit is expected to be small. Australia government selected Mitsubishi Heavy Industries Mogami-class frigate, a Japanese-built naval warship, as its preferred platform for new general-purpose frigates. Developed since 2018, the ship was also chosen for Japan's Maritime Self-Defense Force. Australia cited its proven performance, versatility, reduced crew requirements, and future scalability. Mitsubishi Heavy Industries will collaborate with Japan and partners through the final selection, supporting defense ties and Indo-Pacific maritime security. With defense-related demand expected to rise both domestically and internationally, this is a positive factor for Mitsubishi Heavy Industries. Stock price. This chart over the past year shows the stock price in Japanese yen at 3,818 as of September 12th. This chart shows the stock price in US dollars at 25.85 as of September 12th. Mitsubishi Heavy Industries' stock price has been rising quite steadily, and over the long term it shows a strong upward trend. Current PBR is 5.40 and PR is 49.3. Dividend yield is 0.63%. Compared with past PBR, PER, and dividend yield, the current stock price is relatively high, driven by expectations of rising defense-related earnings. Conclusion: all revenue, business profit, and net income reached record highs in the first quarter. As a key defense-related company and a Takaichi stock, MHI is attracting attention. Ongoing defense demand, including Australia's selection of MHI's upgraded Mogami-class frigate, supports its growth. Its shares are relatively expensive compared with past valuations due to heightened expectations for defense-related growth. Overall, Mitsubishi Heavy Industries is well-positioned for continued domestic and international growth, aiming for a new record-high annual profit.